Welcome back, traders. Today is Friday, the 3rd of September. My name is Neville Hornsey, market analyst with YouTrading. And today I'll be talking about the yen and the breakout, retest, and continuation trade. Okay, as always, going to start with the YouTrading.com Forex Heat Map. And once again, the Australian dollar is the strongest currency across the board. We talked about that quite extensively yesterday. I'm going to revisit the chart today, but also we've got the yen, which is the weakest currency across the board. So that's the focus today, really. Right, going to the active trader trading platform. Here we have the currency pairs on the left-hand side and the sentiment indicator. And you can see that 71% of traders are now shorting the euro versus the US dollar, even though the dollar itself is weakening and the euro is getting stronger. But the euro-Japanese yen is also extremely bearish in this sentiment indicator. So hence why I'm looking at that. And if we look down to the USD versus the yen, that's pretty much even, Stevens. And yeah, we'll just touch on that one a little bit. Before we do anything else, the Japanese Prime Minister has said that he won't be standing for re-election, and his term comes to the end at the end of September. So we had a big market reaction in the Nikkei today. That's another reason why maybe we're seeing that is because of the weakening yen. But we had some comments yesterday on the YouTube channel about the Australian dollar sort of analysis that I did yesterday, and I just want to sort of go over this again. We had a head and shoulders pattern. So you've got a left-hand shoulder, right-hand shoulder here, then a head in the middle. The stops generally go above the swing highs. So the head and the right-hand shoulder here. So we have this breakdown. And so anyone that was short here would probably have started with a stop either above the very highs or above this swing high here. So assuming that they haven't trailed it all down, they're waiting for, retest of the neckline and then a breakdown to the, to the lower side of this chart, and their stops would remain there. And so once we get closer and closer and closer, it's at this point in time when we start to see the stops get taken or people just to collapse their short trades and cover, which is when we get up to the sort of 0.79 level. Initially, 0.76 is the target. We've got this little balance area here, this little green candle after this big red candle here. So yeah, now we're above this area of balance. We've broken that today. There's this clean sort of down move here. So, we'll be targeting the area around 0.76. But if we get through that, that's when these guys start to get a bit more sort of nervous and they start to close their trades. And that's how the trend continues. So yeah, 0.79 would be brilliant. And then, if we take that, there's no reason why we don't go a lot higher up to 0.81. But I agree, 0.76 is the most likely target for now. And a lot of that will depend on the US dollar. The US dollar is in a sort of expanding wedge, expanding triangle. It is at the 200-day period moving average. This line of support here, could hold because we've got this balance here where, a lot of buyers obviously came in. But we have to sort of think about, how do we get up to these highs to take out the swing high from March? And that was all on the back of this big candle here, which was the June FOMC. And, if they were hawkish the US dollar based on what the FOMC statement said then, they're obviously starting to feel that, that the Fed may not be able to sort of come through with, sort of enabling this bullish continuation. So, as traders do get more worried about the Fed not being able to taper either as quickly or as extensively as, they'd like, or if they're not going to get the actual rate hike, then, the dollar itself could collapse. And if you think about it, we're just in this big sort of sideways range and we have got a double bottom here and we did take out the swing high here. So yes, US dollar is bullish at the moment overall, but, traders are starting to question the Fed. So if price action gets below this swing high, assuming it's not just a sweep of the lows to take out the stops, there is not a lot holding up this market. It's just this thin sort of couple of days worth of action here, and that could easily collapse down to the the bottom and back into the $90 range. All right, moving on to the euro versus US dollar. You can see that we've broken out of this falling wedge. So no reason not to think that we'll fall out the bottom of this one. And then here in Brent, we've got the weakening dollar and we've got Hurricane Ida causing problems. And you can see that the Brent crude price has actually risen, but it's this falling channel that I wanted to sort of highlight really. Anytime we sort of see something which is descending in a sort of controlled manner, I always look for the break to the opposite side. So if you take a channel, so this was, quite a neat channel. It broke out to the other side, and that's your measured move. So now, we're looking at, say, this channel here. If I just swap that around. Maybe I should just move it like that. So, we could be up towards the $78 just on this measured move of this breakout of a channel. So that's how I sort of view the markets. If I see a descending channel or a rising channel, then I look for a break to the opposite side. Right, going to the actual sort of subject today. I've already said that we've had a big breakout in the Nikkei. And if we look to the dollar yen, dollar yen on the weekly time frame is basically going sideways. If we go to the daily, we're in this sort of just big chop fest. You really don't want to be sort of trading in there. Even on the 1 hour, it's just fake out, come back down to the mean, fake down, come back to the mean. So, we did have this impulsive move here. So there could be more impulsive moves to the downside to come. Obviously, a weakening dollar index may sort of encourage that. But if we go to the euro versus the yen, everything's a lot cleaner. On a daily time frame, we can see that we've got higher highs each day. We haven't taken out a daily low for so long now. We had this impulsive move, then we had a sideways, and then like another impulsive move. We are approaching this swing high here, so there could be some sort of supply in there. So around 131 and below, there could be some sellers in there because these guys were the ones that are buying up. They swept this low, they started to buy up, trying to get back up to here, but then they got rolled over by this sort of bearish move. If you look to the left, we are in this move, sort of upward momentum. We're above the 200 EMA at this point, but the traders obviously wanted to test the 200 EMA and below. They did sweep this swing low here. So they've taken the stops there, found some liquidity, and then that's enough buyers then to obviously get above this swing high. So now we're just waiting to see whether or not there's sellers here around the 130.8 to 131, or whether they're going to take these highs and then go up to this sort of balance area up here. So in that box there. So get above here, then the middle of this is 132, I believe. Yeah, so 132 would be my target if we get above the swing high. Now, if you look at the momentum through the moving averages, 200 EMA flat, 20-day, like definitely moving higher, and the 50 is starting to curl up. So once the 20 gets above the 50, price action should be above this swing high, and then you've got bullish momentum. Traders are more willing to get long when the 20 is above the 50, above the 200. As you can see here, yeah, there might be a pullback into support of the dynamic moving averages, but generally they're more confident about buying the dip, whereas now they're kind of, they're just grinding higher. So if we go down to a smaller time frame, so the hourly, this is the trade that I'll be looking for, on this for a while now. So you basically look for a swing high with price above the moving averages. So we've got price action, which is bullish, momentum's bullish, and we're looking for a breakout, a retest, and a continuation. So here, it didn't quite come down to the highs here. So you may not have got a decent entry there. But then, like I said earlier, if you have a descending channel like this, which then breaks to the upside, maybe that gives you some more confidence to get long. But here you can see we had this big swing high here, tested it, couldn't break through. So there's definitely like liquidity up there. There's definitely orders there, like pushing this market like lower into the moving averages. And then we get this big breakout here, run up, come back down. And so this is what a breakout, a retest, and then continuation trade looks like. And if we go up to this next one, we've got a swing high. It's a couple of tests, can't get through. So there's obviously some orders here, like selling. And then we get here, the sellers disappear. They lift the offer, and then we get this pull up, and then a quick retest, and then again start to move higher. But even here, this is where there were sellers. They were selling, couldn't get through. Buyers step in, and then this is like a retest of, are those buyers still there? So yes, they were, and up it went. Now we're retesting again. So, you might have taken profits, you may not. You might be trailing your stop. If you're trailing your stop, you could use the 200 EMA or the 50. Obviously, get a retest of the 50. That's been solid support so far. So that's one thing to look for. And then you've got this confluence coming where we've got this old resistance, now support. And if we get the 50 up here as well, and it tests that, we'll have that confluence again. So that's another thing to look for with the breakout, retest, and then continuation higher. As I said on the daily, we're going to be finding out whether or not there's supply here around the 138 to 131. So price is going to compress under that level. So you have to weigh up your risks to reward. There's obviously sellers here at 130.7. And then, if we were to take a speculative long here because of the confluence of this support and resistance line and the moving average, then, where would you put your risk? It would either be at this swing low here, which was also a breakout retest continuation trade, or you'd put it down here. And if you put it down here, then that's obviously a lot further away than your take profit. So probably not worth it. If you were to get down here and then put your stop there, then again, it's a 1-to-1 really. So maybe the real sort of trade would be to wait for this to play out. If you've missed out on all of this uptrend, then maybe just wait out for a breakout of that swing high, a retest, and then a continuation higher off the bigger level really. So if I just put an arrow there and then come back to the daily. So essentially you'd be looking for a way to just wait to see if these stops get taken, then wait to see if that old resistance becomes support, and then wait for the continuation higher, and then be targeting the middle of this particular line here. And if you go back to the hourly, you can see, assuming that you can put your stop under a sort of small swing low here, then you've got all this room to the upside, to target. If you go back to a daily chart, and I've got the fib, so from this anchor point here, the swing high down to this swing low. If I just amend that to extend right. All right, so other traders will be looking for a fib retracement. So, we did take out this market structure here to the downside. So, some traders would be thinking that this is now bearish. So this is just a bear market rally. And they might try and short at either the 61.8 or the 50. So that's kind of why I'm really looking at this swing high here. If just halfway back is enough for the traders and they sort of step in with their sell orders, then this comes back down and then we target here. But if that 50% retracement, isn't deep enough and they want to sort of get back into this sort of volume area here, then the 61.8 might be. So that's the targets, and that's why I'm not sort of suggesting that we take a long right now on the euro versus the yen. You know, we should have been long at the break of this sort of 50 period moving average here on the 1 hour time frame, doing this breakout retest continuation, sort of stair stepping higher. But now, you know, it's just looking for the euro yen to get above the swing high, get above the 50, and then see if we can target the 61.8% retracement, the 132 level, and then, yeah, just see what happens from then on. All right, that's the breakout retest continuation trade. It's NFP today, and obviously picking a trade is going to be quite hard because, you know, who knows what the market's going to sort of think of the jobs data. If you do make money, or you have made money this week, maybe just hold on to it, come back next week happy and relaxed, rather than stewing over a loss and, well, unnecessary loss over the weekend. The US markets are going to be closed pretty much on Monday because of the Labor Day, federal bank holiday. So most traders will be shutting down their desks early today. They won't really want to hold risk over the weekend, especially with you know, what's going on in the world at the moment. And yeah, just trade safe and then look for those you know, sort of high probability trades. All right, take care.